Hi, welcome to Innover Training. This is Carol Peugeot, and this is Lesson 4. And this is Ms. Carol's refresher course. And we are going to continue with our T accounts. Today, you're going to walk with me, and we're going to do some exercises together on the T account worksheet. And we're going to make sure that we balance with the accounting equation. Does everybody remember the accounting equations? Assets equals liabilities plus owner's equity. So we're going to do that. Get a sharpened pencil, download the documents and print them up, and get a calculator. And I'll see you in a few. Bye-bye. Okay, so welcome back. So what we're going to do now is we're going to do these exercises together. So I want you to have this. So I want you to go into the comments in this video and find these document sources. The first one is Innover Training Exercise number 3, and the title says T Account Exercises for Lesson 4. And on this sheet, it's going to give us, there's some directions. It's going to give you the accounts that we're going to create and the account numbers. And then it's going to give you some transactions. Now I won't have this sheet in front of us, so you'll need to print it out and have it with you as we go through this together. So please do that. There are 2 pages to it. Okay? Then I want you to go and print out a journal sheet, and as we're not doing a whole lot of transactions, I still want you to print 2 of them because it's always better to have more than one. I always print an extra one just in case. So journal sheet, that's in the comments down below. Make sure you print at least one of those out. And then of course you're going to need the T account template, which we started working on last week. So again, down below, make sure you print that out. That's what we're going to be working on today. Okay? So go ahead and print those out, push pause, print those out, and then come back. Alright, so let's get started. So what we're going to do is we're going to create accounts for the ones that are listed here under Assets, Liabilities, Owner's Equity, and then Expense Drawing. This is part of Owner's Equity, remember, but it's the part where the debits and credits get flipped. Notice how this is mirrored. Over here under Owner's Equity, the debits decrease and the credits increase, whereas under Expenses and Drawing, the debits increase and the credits decrease. Okay, so we'll talk a little bit more about that in a few minutes. So now what we're going to do is we're going to create our accounts. The first one is cash. Remember, cash is always the main one under assets that we use quite a bit. So we want to leave room for cash. So I'm going to create an account for cash, a T account, remember. So I'm going to make my T a little bit bigger for cash than the other ones to leave some room. Debit on the left, credit on the right. You don't necessarily have to write debit and credit here because, again, by the time you do this quite a bit, you will know which side is debit. Debit's always on the left, credit's always on the right. Plus, you could refer to these things right here. Okay? So go ahead and do that and fill in your accounts, and we'll continue on. Okay, so I went ahead and filled in our accounts here. Under assets, we have cash, we have quilting supplies, we have equipment, and we have Mary's Quilts accounts receivable. And notice how I put the account numbers here. Okay. So under liability, I have Maribel's Sewing accounts payable. Remember, accounts payable is money that we owe to outside entities. I put the account number here. This is the car accounts payable. Excuse me. And then under owner's equity, I have the Sherby Capital. Put the account number. Revenue, remember what revenue is? Revenue is money that comes in that we make or we earn through our either doing services or supplies, selling material, selling merchandise. And then we have our expenses and drawing. So we have drawing here. I put the account number, machine maintenance expense, and refund expense. Okay? So now we're ready to start filling in our transactions. So look at your account, your T account exercise number 3. T account exercises for lesson 4. I know it's a little bit confusing, but we didn't do lessons on lesson 1, so that's how it works out. So May 1st, Sherby took $193,000 from her retirement fund and put it in the account of Sherby's Caboodles Incorporated. Okay, so what 2 accounts get affected? So she took cash from her own savings and put it into the business. So 1 account gets debited, 1 account gets credited. The account that gets debited over here, if you look, cash, our cash is going to get increased by $193,000. So I'm going to write over here $193,000. Okay. What other account gets affected? We have to have a credit now. So I'm going to go over here to Sherby Capital. Sherby Capital is, remember, that's the money that is put into, invested into the business. So we increase it by crediting it. I'm going to put $193,000 right here. And look, the accounting equations. Assets equals liabilities plus owner's equity. Whatever I did over here has to be equaled over here. Unless I'm doing something like paying cash for a supply, then I'm just trading one asset for another. It doesn't change anything over here. Okay? The next thing we're going to do is do the next transactions. We bought a long arm sewing machine on account or credit from Maybell's Sewing Machine and Supply for $4,934. All right, so I bought a machine, but I bought it on credit. So I didn't pay cash, so nothing comes out of cash. But I got to take home the machine. So under equipment, I'm going to increase my equipment because I have the machine on site. I can actually use it. So 4,000, and how do we increase equipment? That's an asset. We debit it. $4,934. At this point, I'm not dealing with the cents because that's just another space that we're dealing with. Everything's going to be just 00 cents, but we'll deal with that a little bit later as time goes on. So equipment is increased. What else is dealt with now? I didn't pay cash for it. I bought it on credit, so it becomes now a liability. And how do I increase a liability? I credit it. So I debited the equipment, and now I'm crediting the accounts payable. $4,934. Okay. The next one, May 6th rather, I purchased fabric and sewing supplies from Mabel's Sewing Supply for cash, and I put the check number 118 for $934. So I bought some fabric and supplies from the sewing supply, from Mabel's Sewing Supply. Same place where I bought the machine, right? But I paid cash, so I don't owe this money to her. Once I paid the cash, just the supplies are mine. So I'm going to increase my quilting supplies by $934 by debiting it. Okay. And then I'm going to go and decrease my cash. So remember I was saying when you deal with an asset, I traded one asset for another. I debited in the quilting supply and I credited in the assets. So nothing changed as far as the balance here under assets. So nothing needs to change over here. It's still the same. Okay? Just trading one asset for another. Okay, one little note that I want to just show you guys is as I'm doing these transactions, I'm going to cross out the date on them. That way I know that they have been done. Now, it seems like, okay, it seems simple when you only have a few transactions like we have here, but you might have a page where there's many, many more, and you want to make sure that you don't double up or skip one. So it's a good idea to, as you do the transactions, just cross out the date as you go along. Okay, the next one. I received an order for a memory quilt. This is on May 10th. Customer paid cash $1,857, and it gives the check number. I received an order on a memory quilt. So they paid me for a product that I'm going to create for them. Okay? So I have the cash. So I need to debit and I need to credit. So under cash, she gave me cash, I'm going to debit it. So I'm going to debit it by $1,857. Now, she paid me for services that I'm going to do for her or create for her. So that's part of our, you said revenue, you're correct. And how do we increase the revenue? By crediting it. So $1,857. So on one side, under assets, it's debited. Under owner's equity, it's credited. Okay. May 11th, Mary's Quilts and Things ordered 5 quilt tops for a total of $4,563 on account. So Mary Quilts and Things is a quilt store that sells them. I make them, she sells them. So she ordered these from me, so I'm going to create them, and she's going to sell them in her store, but she bought them on credit. So what account gets debited, what account gets credited? Now, she didn't give me cash, so I'm not going to do anything with my cash account. But she did buy it on credit. So Mary's Quilts, this would be Mary's Quilts, and that's accounts receivable. I'm going to increase this accounts receivable by $4,563. Okay? Now, even though she didn't pay me cash, I still made this sale. So when I make a sale, it goes under, if you said revenue, you are correct. Now we increase that revenue again by crediting it. $4,934. Ooh, $4,500. Looking at the wrong number. Sorry about that. And $63. Always double check your numbers. I guess I was looking at another number here. $4,563. This is why you should use a pencil, by the way. I just was so sure of myself that I didn't think I needed a pencil. Anyway, you can see that clearly. And remember, this is just a worksheet. $4,563. Okay. Now, we have a debit on the left side. We have a credit on the right side. Still balances. Okay. Next one, paid sewing machine maintenance of $156 to Johnny's Machine Shop. So I paid out money, and I had an expense because I had to maintenance my sewing machine. So I can't debit the asset. Remember, we always record our debit first. So I'm going to go over here to expense, and I'm going to, under machine maintenance, I'm going to debit the $156, and we paid that out, so I'm going to over here to credit $156. Okay, May 20th, we paid $205 towards Maribel's sewing machine and supply account balance. Now remember, earlier in the month, I purchased a machine on account. Now I'm going to make a payment on that account. So, remember, we always debit first, so under asset, we don't want to record it as a debit, the cash. We want to record it as a credit. So let's go over here to liability, Maribel's sewing accounts payable. We initially credited it for $4,934, but since we're going to make a payment on it, we're going to reduce this amount by the $205. Okay? Remember, that comes out of our cash, so we'll go over here to cash, $205. Okay? So we debited and we credited on one side. Always a debit, always a credit on one side or the other. Excuse me. Next one, Mary's Quilts and Things paid $316 towards their account balance. Okay, remember, Mary's Quilts and Things purchased quilt tops from me on account. Now they are paying on their account. Okay, so they wrote me a check for $316. So I'm going to go over here to my cash and increase it by $316. And then I'm going to go over here to Mary's Quilts and Things accounts receivable, and I'm going to reduce their accounts receivable because they're making a payment. So remember, again, under this asset, I just traded one asset for another. I traded part of the accounts receivable for some cash. So nothing over here changes, because the balance over here stays the same. If you were to calculate these, this balance would have been the same, because I just traded one asset for another. Okay. Next one. The owner, which is Sherby, withdrew $2,590 in cash for her husband's birthday present. So what she's doing now, it's her company, she's taking the money out of it for her own personal use. So we want to decrease an account where we're taking the money out, which is cash, and then we're going to express the withdrawal over here under expense and drawing. That's under owner's equity, remember, under expenses, or under drawings rather, sorry. So how do I increase an expense account? I debit it. So how much was that? $2,590. And then the cash is going to be reduced by crediting it $2,590. All right, next one, May 29th, I refunded a customer $40 for a quilt discount. So this was something that the customer had already purchased, but for some reason they needed to have a refund. So in that case, I'm going to be decreasing my cash because I'm going to give her $40 back, but I'm going to express that refund under refund expense. So I increase this refund expense by debiting it, $40, and I'm going to decrease the cash over here by crediting it, $40. Getting the hang of it? It's pretty simple. If you just remember what happens here has to happen here. Everything needs a debit and a credit transaction. All right, May 30th, purchased a delivery of a car on account for $11,345. Oh boy. I get a car on account. So, one account gets credited, one account gets debited. Well, we received delivery of the car, so now we have the car. So we're going to consider the car equipment because that's part of what we use for our business. The car is worth $11,345. We're going to increase it by debiting it. $11,345. Now, I didn't pay cash for this. I owe money on this account. So I have to go over here to liability, and how do I increase the liability? By crediting it, and I have here the car, accounts payable, $11,345. What happened here? Happened here. May 30th, I paid $287 on an electricity bill. Okay. And I forgot to put a utility expense. Oh. I did that on purpose so you could see me make one here. And we're going to make this account 503. Okay. Utility expense. Okay. So I wrote a check, which means I paid cash. So I'm going to decrease my cash, but I'm going to increase my expenses. So I increase by debiting it, $287 under utility expenses, and then $287 here under cash is credited because I'm decreasing. I wrote a check. All right, last transaction. May 31st, I received a check for $1,600 for graduation quilt top. So somebody purchased a quilt top from me. They paid cash. So, real simple, I'm going to increase my cash. I'm going to increase it by debiting it. $1,600. Now, what else do we do when we made a sale? We increase our
Accounts receivable.
revenue. They paid cash for it. They don't owe this money. So I'm going to increase my revenue by crediting it, and I'm sorry, I lost the number here, $1,600. Okay? Okay, now that all the transactions are recorded here on the T account, remember this is a worksheet, so it's okay if it looks a little messy, it's okay. Now what I'm going to do, or I want you to do as well, is I want you to add up both sides of each side of the account and put the balance underneath it. If there is only one balance there, like this one, just put a double line because that is the balance of that account. It's called the normal balance. Okay? So make sure you add up. If you have a number on the quilt, like this side right here, this is a credit. So this gets reduced from the normal balance. So you subtract this from that and put the number right here and then double line it. And I'll come back and I'll show you how I did it. Okay, so what I did is I went and I calculated all the accounts to get accounts. All right, so let me explain what I did here. Over here under assets, remember our debits are the increasing side under assets. So we always want to write our balance on the side that increases. That's called a normal balance. The side that increases under assets is the debit side. So I notice I have the balances written here, and I have them underlined, double-lined. Okay, so here's what I did. I added up the debits, and I got this number, and I added up the credits under cash, and I got this number. Now, in order to get the balance, I need to take the credits, see this is a negative, right, and subtract it from the debits. So I took the $4,212 and subtracted it from the $196,773. And I got $192,561. And I double-lined it. Okay? Under here, under quilting supplies, there's only one entry, so I just double-lined it. Under Mary's quilting supplies, accounts receivable, I had two entries. I had a debit and I had a credit. So I took that credit and I subtracted it from the debit over here. And I got the balance, $4,247, and I double-lined it. Okay? Under equipment, I just added these two together. Those are the two entries. And I got $16,279, and I double-lined it. Okay? Going over here to liabilities. Under Maribel Sewing accounts payable, I have two entries. I have a credit and I have a debit. Now remember, it's opposite here. You increase by crediting it and decrease by debiting it. This is why I have these little shortcuts here to show you. So I took the credits and I added them. All right, no, I'm sorry. I took the credits and I subtracted the total debits. So I only have two entries, the $4,934 credit, and I subtracted the $205 and got $4,729 double balance, and I double-lined it. And I wrote that balance on the credit side because that's the side that increases. Accounts payable, the car, I only have one entry, so I just double-lined it. Over here under Shelby's Capital, only one entry, double-lined it. Under revenue, I have 1, 2, 3 entries, so I just added them together, and I got $8,020, double-lined it. You with me so far? Yep. Okay, good. Now, over here, remember, this side of owner's equity is opposite of this side of owner's equity. So, on this side, we increase by debiting it and decrease by crediting it. Whereas this side, this is the plus side of owner's equity, this is the negative side of owner's equity. So under drawing, remember that's where I took the money out of the business, $2,590, one entry, double-lined it. Machine maintenance expense, one entry, double-lined it. Same thing with refund expense, double-lined it, and utility expense, double-lined it. Okay? So now I have all my accounts balanced. I mean, all my accounts added up, and I balanced them. Or I added up the balance. Balance means two different things in this case. All right. So now go back over here to assets, and I look at all my double-lined numbers. That's why I double-lined them so you can see it clearly. The $192,561, add all these together. $192,561 plus the $16,279, $934, and the $4,247. It gives me a total of $214,021. And I just kind of circle the balance. Right? Remember, this is a worksheet, so I'm not ready to go down here yet. We will. Again, over here under liability, I just took the two balances and I added them together, $16,074. Same thing with owner's equity, the positives, $193,000 plus the $8,020. Okay? And then over here, the owner's equity, the expense and drawing, I added all these balances together, the 2,590, 156, 40, and 287. And I got the balances and I wrote them down here. Okay? Still with me? All right. So now, let's go back to our accounting equation. Our accounting equation is assets equals liabilities plus owner's equity. So, when we do this balance, this has to maintain. We have to balance under this equation. Otherwise, we made a mistake, either in our math, or we added a number in the wrong place, or we didn't add a number in the right place, or we didn't add a number at all, or we even double accounted it, which that's a mistake that sometimes is made. Okay, so I took all my assets. Remember, assets here under total, $214,021. Assets. I'm going to write assets here so you can see that. Equals liabilities. So I brought down this balance for liabilities. $16,074 plus owner's equity. Now, how I get my owner's equity? Notice there's two numbers up here. I have to take this $201,020. That's a hard number to say. $201,000 and $201,020. How's that? Okay. And I have to subtract it from the expenses, from the negatives here. So I have to subtract this number. The $3,073, I have to subtract that from that $201,020, which gives me $197,947. And this is owner's equity. So let's see if our accounting equation balances. Assets equals liabilities plus owner's equity. So we add these two together, and let's see.
Handy dandy calculator.
Handy dandy calculator. Let's see, let's get a drum roll here. So assets equals liabilities, so I'm going to take the liabilities, $16,074 plus $197,947. And I get $214,021. So, do they equal? Yes. My assets here, $214,021, and my total owner's equity, $214,021. Yay! Always get a little charge. That's one thing I love about bookkeeping. You always get a little charge when you balance, and that's kind of cool. So anyway, I balanced. Yay! So that is the T accounts. Our next lessons, we're going to actually do the journaling. The journaling is where we're going to take this information and we're going to apply it to the journal. So, this is Carol Peugeot from Innover Training. By the way, I have in the comments, I have an extra exercise so you guys can do that on your own. Next week, I will post the key to it. So it's going to have the same thing. It's going to have equations, and it's going to have a T account sheet here that you can print up, or just print up an extra one, and you can do these exercises on your own. So try it and make sure you balance. Watch this video over again to help you, to help you remember how to add up and how to balance everything. So, Ms. Carol Peugeot from Innover Training. This is Ms. Carol's refresher course, and I'll see you next week. Bye-bye. Hi, this is Carol Peugeot, and don't forget to subscribe, to like, and to hit that bell, because